U.S. President Donald Trump recently signed an executive order in a bid to ban American companies from investing in Chinese firms that the administration alleged of being owned or controlled by the Chinese military. Some have called the move a historic first for penalties on China's capital market, as well as financial decoupling with China. Others, meanwhile, theorize that with Trump's term coming to an end, the administration is speeding up poisoning China-U.S. ties and creating difficulties for the new administration. So what is Trump doing here, and how many obstacles are there in China-U.S. ties for projected winner Joe Biden? And what would Biden's China policy look like if he can step into the office smoothly? Joining me for the discussion in Beijing, we have Zhao, Research Fellow of Chinese Academy of Social Sciences, and via Skype from Philadelphia, Brandon Blackburn-Dwyer, President of Grasshopper Strategies. Welcome to the program. First, let's take a look at the executive order. The order applies to 31st Chinese companies previously identified by the Defense Department as having links to China's military, including China Mobile Communications Group, Huawei, Sinochem Group, just to name a few. And it prohibits the purchase of shares in the companies or investment in emerging market funds that include the firms. Brandon, I find the timing here extremely interesting. The president signs the order just 2 weeks before the end of his term, and the order takes effect January 11th, which is about a week or so away from Biden's inauguration, and it gives American investors until November 11th next year to fully divest from any shares or funds that involve the companies. Given all of these timings and time frames, just how likely will the executive order be implemented?
Fairly unlikely. This is an executive order that is all about show and not really do much. It is technically a historical first in that it is the first attempt to bar any Chinese company of this sort from U.S. capital markets. It's a first in that it takes a 20-year-old list from the U.S. Department of Defense and actually adds theoretically some regulatory teeth to it in terms of finding some way to create penalty out of it. But the reality is this is President Trump trying to satisfy his base and stakeholders who want him to look tough on China. This is Trump trying to show that he is still in charge of a country that has just elected someone else to be president. And finally, this is a tool that he wants to use against Democrats down the road that he can say, 6 months from now, see, I was tough on China and I would have stopped whatever the issue of the day is if only they hadn't turned around and rescinded my executive order. Beyond that, this has nothing much else impact.
Mr. Zhao, why do you think Trump is doing it if he knows that this goes on to show the type of legacy he wants to leave behind when it comes to China-U.S. ties? Is it about showing hawkishness and toughness that he has had on China?
Well, that's one part of his scheme. I think it's very important to notice the difference between Trump and his team. And I think this idea is very much from his anti-China team, that they are continuing their strategy from the beginning of this year. All in all, by some statistics, if you add executive order and administrative measures against China altogether, this year alone, the White House has taken about 159 altogether against China. So this is not something new. They're continuing their agenda at this point, and I think and we expect that they will continue to do this until the end of the term, very end of their term, probably the noon of January 20th next year. And one of the things that they're doing at this moment, as you said, is about legacy. And one of the White House officials has said that this legacy is going to prevent the next successor or the next administration from doing anything to turn that around, because that will equal to political suicide. That's from their playbook, I think.
If this is about making it difficult for the incoming administration, Mr. Zhao, in what way will projected winner Joe Biden find it difficult to turn it around? Some in China have called it further poisoning of China-U.S. ties. Will this executive order, without being executed and implemented, still do that job of poisoning ties and making trouble for Joe Biden?
Well, I think for Biden, because these are executive orders, so for him, if he has the will to do it, he can reverse that executive order or cancel it. However, I think the problem right now is that there's so widespread anti-China sentiment in the United States, and particularly among Trump supporters, he's going to continue to champion this anti-China slogan, and to point at his legacy and monitor any change by the Biden administration and say they are going to be weak on China or they have taken bribes or being corrupted by Chinese influence, and therefore they changed their attitudes towards China. So that's the danger, that they are going to play this domestic politics and using China a sort of bait against the other side. And I think, in 2 years there will be a midterm election, and in just a short 4 years there will be another election. So because of these election circles, I think Biden's administration will be very careful about how to deal with China. They don't want to show that they are too amicable in terms of dealing with China or too soft on China.
Let's look at the logic behind this executive order, because according to the White House, it believes China is increasingly exploiting U.S. capital to fund the development and modernization of its military, intelligence, and other security apparatuses. And those sanctioned companies are raising capital by selling securities to U.S. investors. But some of these companies have already denied connections with the PLA. Brandon, how do you look at these allegations by the U.S. government? Does it make sense that China wants to advance its military with U.S. capital?
Well, let's stay away from the argument of whether these companies are actually doing it. Let's just go with the argument of these are Chinese companies that are listed in the United States. So they are accessing U.S. capital markets. That's how a global economy works, right? That's how international trade happens, and that's how our economy brings us closer together and makes war a harder and harder aspect. So on one hand, we have 30, 40 years of integration trying to be walked back by the Trump administration. Now, their reason here is that they say these 31 firms are in some way, shape, or form contributing to the military complex inside China, whether that's directly by actually working with the military or whether it's by overall improving the technology inside China. The latter one is really hard to argue because these are leading technology companies, and technology is technology. If you develop it, it helps everybody, and unfortunately, it almost always helps the military, regardless of what country you're in. But the real problem I have here is, even if these firms are helping the U.S. military, the U.S. military contractors, Halliburton, Lockheed Martin, massive international companies, are publicly listed. We don't seem to have a problem with capital markets being part of the mix when it's our military-industrial complex. We don't have a problem when it's European companies. We don't seem to have a problem when it's Russian companies being internationally listed, but we do have a problem when it's China. So we need to really reevaluate long-term whether capital markets are going to continue to be globalized, or we're going to go back to a world of the mid-20th century where capital markets were much more restricted to national borders and allies.
Mr. Zhao, is this another case of double standard, as Brandon was explaining, or why do you think the Trump administration is all of a sudden targeting the financial ties with China? Do you think it constitutes financial decoupling with China at this point?
Well, I totally agree with Brandon's analysis. I think one of the things on top of what he said, to my mind, the Trump administration always tell half of the story. As they were telling the story about globalization, they only told people about how harmful globalization is, but they don't talk about how globalization created jobs inside the United States. And also, in this case, they only talk about how Chinese companies are raising money from the American market. They don't talk about how the Chinese companies return with dividend and with yield to American investors. So these are really one-sided story, and double standard. Of course, they're using this double standard against China. But overall, remember, the strategic goal of the Trump administration is to compete against China and trying to decouple whenever they can. But the very idea is that whenever there's coupling, China is benefiting just one-sidedly, benefiting from this bilateral relationship, which is false from the very beginning.
Brandon, what has been the response from the business community in the U.S. Because investors are pretty much being yanked away from some rather high-yield Chinese firms that have rebounded and recovered quickly after the pandemic.
Yeah, there are, in some small cases, U.S. investors that are going to miss out on some tasty gain, shall we say. And you do see a couple of the companies that were at the sort of the forefront of this list dropping 7 and 8% in terms of annual day-to-day trading, which is a real loss of money. But on a big picture, most of the structural investors really agree to this with a big meh. You know, we're talking about major investment funds that are like, you know, we did an analysis and we hold about $68 million in stock, which sounds like a lot to you, me, and everybody else probably watching this, but that fund alone has $400 billion under management. So $68 million for them is a drop in the bucket. They could divest from those Chinese firms and really not even notice it. The bigger problem for me, for investors, is going to be the headache that is the executive order goes beyond just stock ownership, and it says any security exposed to this, anything that's a collateralized asset, anything that's a mutual fund that may or may not use any of these as an index stock is going to have to figure out a way to decouple by November 2021. This is why I see this executive order being overturned. It's badly written, it's too complicated, and really has no real benefit. And at the end of the day, even if we did divest from these Chinese firms, it's less than a couple percent for any of these firms in their overall market cap. They can find that money somewhere else, so it doesn't really hurt them.
Mr. Zhao, let's indulge ourselves and say that Joe Biden would leave the executive order in place given political considerations. Would it in any way impede or hinder the development or modernization of China's military?
Not at all. I don't think that's a very important part of the financial structure for the Chinese company. As Brendan pointed out already, that on the one hand, this is only a very small part of the overall portfolio for American investors. On the other hand, for Chinese financial market is also a very small part, because China's growing its domestic financial market in Shanghai, in Hong Kong, in Shenzhen, and a lot of the new Chinese tech companies are more favor these places to IPO rather than the U.S. market. And I think initially Chinese companies are willing to go to New York because they are transparent and they
Zhao, I'm sorry to cut you off.
We're
We're running out of time here on this broadcast. But great insight from both you and Brandon. Thank you so much for your analysis today.